Good afternoon, once again. Getting ready to start through the information on a new series of our educational series, a new webinar, and then open it up for questions at the end of the presentation. My name is Jeff Benson, the program manager for Builders Risk for Victor Builders Risk. I would like to introduce Tyler Nichols, head of marketing for our program. What we're going to do today with our educational series is talk about what we consider the top questions that insureds are going to ask you. Now, for those of you in the business, you're going to recognize a lot of these questions. I will say there's not one right answer to these questions. I've personally polled a lot of our agents, have kind of pulled a lot of different ideas in, but this is more just to give you ideas of how to carry the conversation with them. I was sure you'll find your own way, but it is an interesting line of business to talk about. So hopefully everybody's ready to roll today. We're going to try to keep this 20 to 25 minutes. And look forward to your questions at the end. First of all, let's geek out on Builders Risk. So I'm always talking to my fellow employees about being a geek on Builders Risk, which that's referring to me. I've been doing this a long time, and I do think it's a great line of business. It's a very broad coverage for a relatively inexpensive premium. So, but it's a very, very important, very specialized line. So let's go ahead and get into it. So start thinking about an insured walks in your office. What are they going to ask? Oops. Question one. And I want to, before we get into the questions, I do want to say one other thing. There's really two types of insureds we're talking about today in Builders Risk. About 2/3 of the insureds that take out Builders Risk are builder contractors, be it a general contractor building ground up new or a contractor doing renovations and remodeling. That's one type of insured. The other type of insured, which is about a third of the insureds in the line, are owner developers, either the owner of the home or the developer of the commercial project. So builders or owners. So just be thinking about that. First question, you ready, Tyler?
Yes, sir, Jeff, I am. Jeff introduced me at the beginning here. So I'm going to do a little narration on these questions as we roll through. First up, Jeff, what is Builders Risk and why do I need it?
Kind of sounds logical, doesn't it? So I would, you guys are experts at talking to your insureds, but personally, I think to keep it very simple, at least initially, is most important. So Builders Risk is insurance for your property. And another name for Builders Risk is course of construction. So I like that name even better. So it's really insurance for your property while something is being built during the course of construction. So that's number one. That's what it is. It's very, very simple. Why do I need it? Seems kind of simple, but so there's really the number one reason I hear from builders is if there's a lending institution involved, there's a bank involved, and they're loaning money, they're going to mandate that you have Builders Risk coverage. So number one reason is it's mandatory, you have to have it. The number two reason I would say, so maybe I'm an owner or a builder and I don't need to borrow any money, so why do I need it? Well, the way I would look at this is it's relatively inexpensive coverage for a lot of coverage. So the average rate, depending on where you're located in the United States, let's just say is 20 cents per 100 of project values. So that means for every $100,000 in coverage, it's going to cost you $200 in premium. That seems pretty simple. It seems like good sleep insurance for the builder or the owner. So I would say it's inexpensive, broad coverage, and that's why you need it. Tyler, feel free to add anything to that you want to too. So.
Yeah, what comes to mind for me, Jeff, is as far as why do I need a Builders Risk policy specifically outside of what typically would be known as maybe a permanent placement property policy, would be that it no longer fits the guidelines of my current carrier, whether I'm a homeowner or whether I'm a real estate investor. There's a specific need for Builders Risk, could be bank required, as you said, or it could simply be that there's no better place for my property at the moment, and the Builders Risk provides a solution to that.
Excellent point. Because basically, this is so specialized, it is designed to cover property while the project is under construction. So yeah, it's not a homeowner's policy. It's not a vacant property policy. It is a course of construction policy. Good point. All right, let's move on. Question 2. Cash, I like these pictures. How much will it cost? Oh, I'm sorry. Go ahead, Tyler. Ask me the question.
Jeff, you beat me to it. And the question is, how much will it cost?
It is funny. I've called a lot of agents in the last couple of weeks, and I posed the question to them, what does the insured ask you? This was one of the first ones, was like, yeah, it all sounds good, but what's it going to cost me? I said earlier, now depending on the construction classification, the protection class, the location, the value, the deductible, the cost does vary. But you might want to take a different tact and say, what will it cost you if you don't have your project insured? So I'm building $1 million single family home. It's completed pending closing, and the fire comes along and burns it down. So now I'm out $1 million. What if I could have insured that home, that $1 million home, for $1,000 or even $2,000, whatever it is at that time? So really the cost is, what's the cost of not insuring it? That's the way the tact I would use. What do you think, Tyler?
I'd agree. Builder's risk is very affordable coverage, Jeff, as you alluded to. And sometimes I think there's some sticker shock going from a builder's risk policy to, say, a vacant building policy, where you might have an unoccupied structure that is coming off of a builder's risk or waiting for a project to start. So from my perspective, builder's risk is actually a relief in some cases and a very affordable coverage to take out.
I concur. Question 3.
Okay, this is something that came up a little bit earlier for us, Jeff. I think this pertains mostly to the homeowner, but the question is, I have coverage on my house. Why would I need a builder's risk policy?
So let me set the scenario up for you. So we have a homeowner and they're going to add a room on, do a room addition. So they come to you and say, this is what I'm going to do. My number one is the homeowner's carrier that's on the permanent home might say, if you're going to do major work to this, there's no coverage. Coverage is suspended. So that's number one reason is you think you have coverage on it, but you might not. Once you start ongoing construction activities, many times the property insurance policy will be suspended. So I would say that's number one. Why do I need it? Number 2 would be, once again, looking at it either through the eyes of an owner or the eyes of a builder. So it's quite obvious in the eyes of a builder, if the home's insured under someone else's name on a homeowner's policy, there's very little, if any, coverage for the builder. And we could get into some of the nuances of the automatic coverages, optional coverages, but the bottom line is, how do you protect the interest of the builder? How do you protect the interest of the subcontractors that are working on the site? What if property is delivered to the site, but it's not attached to the structure yet? Does the owner own it, or does the builder own it, or does the subcontractor own it? These are all the questions that you got to ask and say, if you write a builder's risk policy, write it in the name of the owner, add the builder as an additional insured. Now everybody's covered. We don't have to worry about who owns that property. There's actually coverage on it. So once again, I think it goes back to what Tyler said earlier, but this is specialized. It's designed for projects under construction. It's the proper way, the best way to insure something. Tyler?
Well, important to think about the different options that we'd have in this situation as well. A homeowner considering a large renovation of their home, and the different options we might have, Jeff, considering the existing structure, or possibly looking at the improvements and betterments component only. I don't know if you wanted to talk a little bit about what the options are when it comes to a homeowner and a renovation at their home, and where builder's risk might fit in.
Once again, excellent point. So you really have 2 distinct exposures when there's a structure being renovated. It is the existing structure that's already there, and the values of the improvements that you're putting into it. So let's just say you're comfortable, or the insured's comfortable with the structure. I have that coverage somewhere else. I only need coverage on the improvements. So you can write a builder's risk policy for only the improvements. That's fine. But let's say they've looked at their permanent property insurance, coverage is suspended during construction. Now they need to cover both the existing structure and the improvements. Builder's risk can also do that. So however you want to do it, just work that out with your builder's risk underwriter.
Good point, Jeff.
Good deal. Question 4.
We're rolling along here. We're about halfway to becoming a full geek on builder's risk, much like Jeff. And really important question here, Jeff, on how to determine the value that we need to insure our project.
All right, this is the world according to Jeff Benson, but I've been doing this a long time, and the easiest thing to do with a builder or an owner developer would be, the best way to insure a project is the selling price minus the land. The builder knows what he's going to sell it for. Either he's going to sell it to, an individual, it's a spec house, or he's selling it to some big entity, whatever he's selling it. So whatever that selling price is minus the land value, all of that is covered on a builder's risk policy. The hard cost, the soft cost, labor, materials, overhead, profit if they want it. So the easiest thing to tell them, and I like to keep it easy, selling price minus land, and then we won't have any problems with co-insurance, over-insurance, under-insurance. It's just an easy formula to remember. So that's how you determine what the proper way to insure something is in builder's risk.
I like it, Jeff. Very straightforward.
Cool. Question 5.
Jeff, tell us a little bit about what losses are covered under the builder's risk coverage form, please.
All right. Well, the form that we use in our program is 17 pages. So for the sake of being brief today, I won't go over all 17 pages. Is that fair enough, Tyler?
That's fair.
All right. So what I'm going to say, this question actually came from a buddy of mine who's a big agency in the Southeast. He said his insured will say to him, am I covered? So we kind of reworded it and say what losses are covered, but they want to know they're covered. So, you're not going to list everything, but I would say they need to know the major things. The number one cause of loss in builder's risk, non-catastrophic loss, is fire. So it's the number one thing that happens to, of course, like a building it burns down sometimes. So obviously they're covered. You might get into catastrophic events, and we're going to touch on that in a minute, but obviously they're covered for that too. They should be it earthquake, flood, windstorm, hailstorm, those kind of things. Vandalism is covered, theft is covered. All the things you could think of that would happen to a project, if the proper builder's risk policy is selected, all of that is covered. So that's how I'd keep it simple. Say, yes, you're covered.
Jeff, would you say that on a builder's risk coverage form, the property is covered for any cause of loss unless otherwise specifically excluded?
Yeah, I was trying to think of how I would sell that to an insured, like an average person building a house. And, you could talk about broad form and all risk and exclusions, but you might lose them. So, you would have to say not everything is covered, but the major things that could happen, you could even ask them, what do you think would happen to your property? And if they said, well, a fire could burn it down, or somebody could steal my windows, somebody could vandalize, kids could vandalize the project, all of that is covered. I do think it behooves you as an agent to talk about property, what's covered on a property policy. And then if you want to get into casualty, that's not what we're talking about today on the GL side of it. So you might want to make that distinction with the insured. This is a property coverage. And we're going to get into this a little while later, but you probably need to explain the difference between hard cost and soft cost. But it's covered. How's that?
That's good. Let's move to question number 6.
Question 6. I bet you can tell by the picture what this is going to be, but let's talk about it.
Pretty pertinent question here, Jeff. The timing of this webinar and what type of catastrophic events would be covered under the builder's risk policy?
All right, well, obviously, if you're selling insurance in anywhere in the coastal United States, primarily Southeast coast, but even the Northeast, they have their share. And I guess even the Pacific has been pretty active this year too with typhoons, but that's the other coast. So, you need to explain to them, yes, you're covered. Now, most of the time, the deductible is going to be different. And we won't get into all the specifics of that, but you need to explain to them if they have a percentage wind deductible, what that means. They are covered, but the deductible might be larger depending on the event that happens. Most builders risk policies initially will exclude flood and earthquake, so they have to be added separately, but they are available. You need to add those where you can. So you have the flood, the earthquake, and the windstorm, the tropical storms. Another thing that comes up a lot today is what's going on to our friends in California with the brush fires. That is a catastrophic event. So, as long as they have proper builder's risk in place, they would be covered for those brush fires. That's another event. So, I would feel comfortable that the program or the policy you're selling, you're insured, you could say, yes, the catastrophic events are covered. Tyler?
Question number 7.
This was my favorite picture of the day, by the way. So I felt that way on some days too. So.
Yeah, in case we didn't know, Jeff, yes, a true builder's risk geek. We're in your presence today. Jeff, please enlighten us. What happens if I choose to underinsure my project?
Okay, first of all, we'll call it penny wise and pound foolish. Maybe you save a little bit of money on the premium when you initially write it, but how about at the end of the project, back to that $1 million house? You got $1 million in it, selling price minus land, $1 million. I've chosen to insure it for $500,000. Well, what happens in most of these policies is they have a co-insurance provision. Co-insurance did over should have times the loss. So let's just say, for argument's sake, it's 100% co-insurance. They choose to underinsure it. They now have self-insured half of the project. So from an agent's perspective, you need to tell them this is inexpensive, broad coverage. We need to make sure we get the value correct. It actually helps you out in the event of a loss. So it's all about proper insurance, proper values. Selling price minus land. How's that? Beat that one into you today. Question 8.
Jeff, why is the total completed value used when there is nothing at risk on day one? Jeff, I got to say, I get this question pretty frequently, and I'm hoping that you can shed a light on why this is.
I think I can. I think I'll take a stab at this. So first of all, when do you place this coverage? Usually it's at the closing when the builder, developer, whomever has decided to start the project. So they've already bought the land. Maybe they haven't bought the land, but they're going to get the loan from the bank. So the bank says you need to have coverage in place before this thing even starts. And the bank wants to see the coverage for the total value of the project. So that's number one, is you probably don't have a choice, but you got to do it. Number 2 is, and I don't know how you would explain this to an insured, but I can explain it to you guys. You're all agents. Builder's risk is the reason the rate is very low on builder's risk is it recognizes the rates are promulgated based on zero amount at risk going to, at the end of the project, 100% at risk. That's why the rate is so low. So the company recognizes, and the experience is thus, that there is very little exposure in the beginning and there's a whole lot of exposure at the end. So that factors in. That's why the rate is much lower than permanent property insurance. So those are the major reasons why it's completed value builder's risk. It's the number one way builder's risk is written. There is a few policies out there that are value at risk. I don't see it as much in the industry as I used to. I would advise against it because it creates claim problems. Completed value is easy. We know what the completed value is, selling price minus land. We write the policy for that. There's no co-insurance problems. There's no claim problems. Everybody's happy. How's that, Tyler?
That's good. question number 9, please.
Question number 9. Looks like this house has seen better days.
Okay, kind of going back to our catastrophic coverage question a moment ago, but why do we have different deductibles for wind, earthquake, and theft on the policy?
Yeah, I don't know how deep you want to go into this with an insured, but it is based on the experience of the industry. The catastrophic events have done such broad losses to so many people that the only way to offer the coverage is to have these deductibles. So kind of the market dictates where these things go. And things like earthquakes and flood, things like that are so catastrophic in nature. That's why you have to have larger deductibles so you can offer the coverage to more people. Maybe they'd understand that a little bit. But I will say it's critical that if you do have these coverages with different deductibles, make sure you explain that to the insured in great detail. There's a lot of confusion out there about percentage wind deductibles. That's all I'm going to say about that. In the Southeast, I hear it every day. An earthquake has a kind of a funky way of doing deductibles, along with flood, with waiting periods and things of that nature. So you need to understand the coverages you're selling. I put theft in there because I still see some companies that have higher deductibles for theft. Maybe it's in a high crime rate zone, and so they put a higher deductible on theft. So make sure your insured understands that, just because of the exposure. I guess it's all based on exposure. There's just more exposure with these types of perils, and so the deductibles are higher. Fair enough?
Yeah, so what you're saying, Jeff, is that different deductibles make this important coverage more affordable to the masses.
Correct. Sometimes the insurer's like, I don't care about the masses, I only care about me. So you got to say, well, these are the best deals that are out there, and you can show them that. And they do vary carrier to carrier, that it's worth shopping it. So question number 10, almost done, guys.
Are hard costs more important than soft costs?
That's like saying, is fire insurance more important than theft insurance? It's all in the eyes of the beholder, and it's after the claim. So I would say no. They're both exposures that need to be insured properly. Think of this too. A hard cost is just that: labor, materials, overhead, things that you can see that happen. The soft cost is a little more abstract, but it can add up. You got to explain to them if there's a covered loss and there's a delay in completion, and that's the key: delay in completion of the project. Some of these expenses will reoccur, so you're going to have to pay them. This coverage will allow you to have that money if you have to have additional advertising fees, architect fees, engineering fees, things that reoccur because of a covered claim. So to me, they're not more important. They're just a different peril that needs to be insured.
What's the best way, Jeff, to get a total for soft costs? Are there worksheets out there, or different tools that we could use to get an accurate assessment of soft costs?
You can sit down with the builder. This is more builder driven than owner driven. Sit down with the builder and show him the list of soft costs, all those things I talked about, and have him tell you what they cost. And so if they reoccur, that's what this coverage does. So yeah, there's a worksheet. I would advise on any sizable project, a worksheet needs to be done, put it that way. And you need to evaluate the forms that your carriers are offering. Some carriers will build in some of this coverage automatically for no additional cost. I'll just take this time to remind you that not all forms are created equally. How's that? I think our last question, no, bonus question. Holy cow, look at that picture. Bonus question.
Protection class, and why is it so important, Jeff?
Probably that picture tells a lot. All right, so the protection class is pretty simple. You sit down with the insured and you say, we have a protection, we have a response time that a fire department has to get to your building when it catches on fire. So response time is important. How far away are you from the fire department? So you say, okay, that makes sense. The further away you are, the more expensive your insurance is. Second of all is water supply. So the fire department gets there in time, but there's no water. How far away are you from the higher fire hydrant? Okay. So those are the two major reasons: how quickly they get there and where's the water supply. But it's all about, if your building catches on fire, how long does it take for the fire department to put it out? And we had a situation here in our local town where a developer built a subdivision and he didn't put the fire hydrants in first. And so instead of being a protection class 2, it was a protection class 10. So can you imagine what that did to their homeowners rates? So it was one of the lead stories in our newspaper. So everybody, all the insureds out there were very, very interested in protection class all of a sudden. So it is something that is usually it is a major rating factor on builder's risk. And if you have an owner that's building a house on top of a mountain somewhere and the response time is long and there's no fire hydrants, you need to tell them this is why your insurance is so expensive. What do you think, Tyler?
Well, I think that brings us to the end of our questions, at least the scripted questions anyways. I know we might have a few other questions that came in throughout the presentation. I'll just take a moment and say thank you to everyone for joining. We appreciate you supporting these webinars, and we hope you had a little bit of fun and got some new information on an interesting topic like builder's risk.
Ready for questions?
Yes, ma'am.
Here we go. What water damage coverage is in a builder's risk policy in regards to flood? It sounds like that is just an endorsement you add to the policy. Do you ever recommend a standalone flood policy?
All right, so flood. Flood is excluded on all the basic builder's risk forms that I've seen exclude flood. Sometimes they call it a water exclusion. Most carriers will, depending on where it's located and what the flood zone is of the structure, you can buy it as an endorsement, like you said. Most of the time, I mean, it really depends on the value that you need to insure. Case in point, you're building a $10 million building. It's made out of masonry and metal. You're not going to probably need 10 million in flood coverage, because even if the flood comes, it's not going to damage the top floors. So then you say, okay, 5 million coverage is enough on that $10 million building. So the endorsement would be fine. I guess at some point though, if you need a really high value of flood, you might have to get a separate flood policy. So it really depends on the exposure, and the value you need to insure it for.
Okay. How does one determine the amount of insurance needed for a renovation?
Good question. There's two things. First of all, you need to determine what the existing structure before the project takes place is worth. Usually that's done on an actual cash value basis. So you calculate the replacement cost minus the depreciation, and you get an actual cash value for the existing structure, number one. Or maybe a better way is the stated value. I'm not going to get into that today, but you can work that out with your builder's risk underwriter. You agree to what the value of that building is before you start. Second phase of this is the renovations. How much are you going to put into the project? That's more of a traditional builder's risk: labor, materials, overhead, profit, soft costs. All of that is built into that construction project. So that would be the amount of the betterments, renovations, and there you combine those two things together and you would have the project fully insured.
Okay. Can you give an example of soft cost?
Soft cost, we'll call it engineering fees, or architect fees is another way. I like that one. So we're building a building, you've paid the architect X amount of money, a fire comes along and burns the building to the ground. Now you have to rebuild it and you have to have new architect plans. So you're going to have to pay the architect again for the same building. That's a reoccurring expense. That would be an example of a soft cost. There's others, but that's the one that always jumps out to me.
Okay. What coverage does builder's risk provide for subcontractors and contractors?
The best policies out there, which I happen to know of a good policy, but that's just me, will automatically include the interest of subcontractors. So that's what it says. So bottom line is we have materials delivered to the job site. They're not installed yet. There's the window package. It's sitting in the garage. Maybe the subcontractor had them delivered. Somebody steals them. On a good builder's risk form, that would be covered. Some forms will exclude that, so you need to be careful about what form you're selling. I would make sure that the interest of subcontractors is covered on the form you're selling.
Can liability be added to a builder's risk policy?
No. Builder's risk is inland marine, course of construction, property coverage. There are companies that write GL for construction projects, but not on a builder's risk policy. That would be a separate policy, completely different exposure. Just a more third-party thing. It's different. Good question, though. I get that. I get asked that question a lot.
Okay, I believe that's it.
Well, I would like to echo what Tyler said earlier. Hopefully this was worth your time in our educational series. We're trying to make this truly educational. These are things that we see every day. Our underwriters see them. These are questions that agents are asking us every day. Hopefully it helps out. And I think is my contact information. Here we go. This will be available on our website too. They're all put out there. They're recorded. And if you need any more information or you want to talk about builder's risk, I'm the geeky guy that talks about it all the time. So there I am. And once again, have a great day. Look forward to talking to you soon.